Good day. It's Wednesday, May the 17th, 2023. I'm Martin Gagel with Market Radius Research. We've got CEO Steve Bromley of Organto Foods joining us today. Organto is a global provider of branded private label and distributed organic and non-GMO fruits and vegetables. The company just provided its preliminary Q1 results and its fiscal 23 financial and operational outlook. And Steve's here to break it down for us. But please remember, it's neither recommendation or investment advice. We're here to learn about the company. Steve, thanks a lot for joining us. Please give us a breakdown on your recent news. Things seem to be looking up and improving greatly for you guys.
Yeah, thanks a lot, Martin. Appreciate the time and appreciate everyone tuning in. So just to go back a little bit on Organto, as you mentioned, Martin, we're focused on organic and non-genetically modified fruit and vegetables. We look at ourselves as a healthy foods platform, and as we go through our growth, you'll see that we've been growing in line with the healthy food trends around the world. An asset-light business model. So, we don't own farms, we don't own manufacturing facilities, and we don't own the retail, but we do everything in between. We add value. Today, we go to market in 21 countries in Europe, about 170 customers. We have a very diverse product offering. So we do organic and non-genetically modified. We don't do genetically modified fruits and vegetables. Not here to say that that's bad. It's just not what we do. And we go up and down the value chain. So we'll provide these products in bulk. We'll provide them in private label for the particular retailer, or we'll do them in branded products. We have two brands. Our Organic brand is our flagship organic brand. We use a digital passport technology to support that brand. So today, consumers want to know where their food came from, how it got them, what the nutritional profile is. And through a QR code that connects to our back office, they can get all that. And we also have the Awesome Fruits brand, which is a non-genetically modified brand. We source our products from 5 continents around the globe. We have boots on the ground in 4. We've been active on the acquisition side of things. We'll talk today about a recent acquisition that we completed, and we have an experienced team in place. And my apologies, I hit the wrong button. So when we take a look at 2022, we had continued revenue growth, over 22 million in revenue, up about 22% versus a prior year, 11% on a currency adjusted, up 22% on a currency adjusted basis, and up 11% actual year over year. We had positive gross margins despite the macro challenges. We'll talk about the biggest challenge we had last year, which was margins. We're happy to say, though, that our margins remained positive when a lot of our peers did not maintain positive margins, but they were certainly down a little bit year over year. And we'll talk about the improvement that we've seen in the first quarter. We realized new customer listings. Our I Am Organic brand launch went well. We completed the acquisition of the new fruit group right at the end of the year, and we had a large stock overhang that got addressed last year with one of our largest shareholders going into liquidation and us needing to place their stock. So those were really the positives of last year. We faced the same macroeconomic pressures that so many did: inflation, supply chains. The Russia-Ukraine war really impacted our operations in Europe, and but we saw all that starting to normalize, if you will, as the year ended. We also had some key customers. We had 2 of our key customers who buckled under the macro challenges, and so they're no longer customers, and we had to replace them. So not only did we feel the pressure, but so did our customers. That impacted our gross profit, and it has had a little bit of an impact on consumer sentiment. Higher priced premium products such as organic, not every consumer can afford them. So we saw that modulate a little bit during the year. Interestingly enough, though, the statistics just came out today earlier this month from the U.S. Organic Trade Association, and organics grew again in the U.S. So even with these challenges, markets are still growing. So all in all, a good year with margin pressure. Real quickly, though, on the 3 key challenges we saw: rising inflation, supply chain challenges, and the Russia-Ukraine war. We've addressed the inflationary issues. It's stabilized. You'll see in a second that, we're seeing our gross margins return here in the first quarter. Supply chains, thankfully, are stabilizing now. And so we're not seeing, the massive challenges that we had in prior years. And look, the Russia-Ukraine war has been going on for a year now, and so things have stabilized in the European market. The Russian market is now opening up for us again. That was about 15% of our revenue. The market's opening up. We're not back in there yet, but we're continuing to monitor the situation. The big challenge in Russia is you got to get paid, and with the banking system, that's a little bit of a challenge. But these conditions have improved. Martin, as you mentioned, last week, we gave preliminary results for the first quarter. We had revenues of 7.4 to 7.5 million, up about 6% versus the prior year. It was our largest quarter in the history of the company, and our 15th consecutive quarter of record sales versus the same quarter in the prior year. And I think what is most important is we saw improvement in gross profit, which is a key focus for us as we work through this year. Our gross profit rebounded to 9.4 to 9.6%. Expect we'll be at the top end of that range when we report later this month, versus about 6% in in Q4 of last year. So really seeing that. And we're going to talk about the future here. We reconfirmed our estimates. We expect we'll have 135% revenue growth in the year. We'll talk about how that's going to happen. 200% gross profit growth and EBITDA positive in the back half of the year. So we're really excited about the new year's bringing. What are we doing around gross margin was a key priority for us. We're focused on our higher margin categories. So things like herbs and ginger, they have higher margins. So we're really intently focused on those categories. We're increasing our structured product sales. So, there's two ways that you do business. You enter into contracts with growers or you sell in the spot market. Traditionally, our business was more spot oriented. We're now moving to more structured sales with retailers. And with that, you get margin stability, more focus on the brands, which have higher margins attached to them. We're leveraging the scale. We're now pretty big players in organic banana and avocado and mango. So we're leveraging the scale that we have in those core product groups and leveraging our group buying strength. And as well, we're taking costs out of the system by centralizing some of our distribution hubs that we use with third parties. We have three core.
Sorry.
Yes.
Sorry. Can you go back to that slide? I kind of missed the structured product sales, how the spot market versus the structure. Could you just clarify that a bit more for me?
Yeah, sure. So if you think about a retailer, they will probably contract, depending on the particular fruit or vegetable, they'll probably contract in the range of 60 to 70% of what they believe they're going to need. And then they'll buy more frequent, and that'll be contracted for a longer period of time, be it a season or year round. And in our case, if you think about bananas, our retailers contract year round because we have year round supply of those bananas.
And with that, then they're assuming you're going to figure out which farm, if you're getting them from Indonesia or South America or whatever, they just know you're going to provide it to them.
They know we're going to provide that on a year round basis, and they'll contract for that. The other part of that, Martin, is the other 25 or 30%. That could be 15%, depending on what's going through their store, or it could be 40%. And the way that they bridge that is they just buy more frequently from a variety of suppliers that they know will have product. And so when we first started in this business, the bulk of our business was we were a provider of that spot, the overflow or underflow that they needed. And today we're much more of a contract year-round reliable supplier.
And does the structured product have better margins? It has more consistent business, so I guess it's way easier to plan and structure your own supply chain, but does it also come with better margins on it too?
I wouldn't say it comes with better margins. It comes with more margin stability and our ability to improve margin throughout the supply chain because we have a much more predictable view of things.
Gotcha. Okay, that's perfect. Thanks.
Yeah. We have three core operational priorities: build supply, build brands, and build infrastructure. And so as we move through this year, obviously, we're intently focused on improving our margins, but we're also leveraging retail listings. So a lot of our retail listings, we only have one product in today, and there's no reason why we can't put 4, 5, 6 of our products in. We're continuing to focus on structured retail, expanding our supply base with global suppliers, and that's going very, very well. Accelerating the growth of our branded products portfolio. We're continuing to work on our digital technology. So we have our digital passport technology that we use with our brand, but we're looking to increase technology throughout the organization and then streamline and leverage our costs. To wrap up, as we look into next year, we think this will be a great year. We talked about revenues up 135%, margins up 200%. The acquisition of the New Fruit Group, which we completed the first couple of days of January this year, certainly brings us size and scale. They'll do close to 20 million in revenue. So when you think about our 22 and you add the 20 that this business will provide as we start to run through the year now, then we have our own internal growth gets us to that $50 million range. We're expanding our retail listings. We're expanding our branded portfolio. We're working on margin enhancement, and we've got some neat acquisitions in the pipeline. So when we look at next year, we expect revenues in the 50 million range, gross profit in the 10% range, up about 200% versus the prior year, and EBITDA positive in the back half. So sorry to rush along, Martin, but, exciting times. And I think, we're excited by what we've seen in the first quarter, that the really hard lifting that we had to do in 2022 to get through the year, it looks to be paying off as we get into this year. So very excited.
All right. And obviously the NFG Group, which you acquired right at the beginning of the year, that's making it was a good acquisition, but it seems to have added nice synergies and sort of scale to your operations. Can you talk about your acquisition pipeline? I'm guessing a lot of other companies got sort of hit over the head hard over the last year, and they could be maybe looking to join up with a bigger group.
Yeah, we do have some. Unfortunately, some of them have been hit over the head too hard.
Okay.
and we don't want to acquire them because of the situation that they're in. But there are those opportunities. Our real key focus right now is on integrating the New Fruit Group and doing a good job with that one. We've got, I'd say, 5 interesting opportunities in our pipeline. A couple focused on North America, and then a couple in Europe as well. We would like to expand into a North American platform, so we're keeping a close eye on that market as well. Having a North American platform, we would be one of the very few companies going to market in both Europe and in North America. And for some of our growers that are in Latin America and South America, they ship to both regions anyways, so we'd be a logical, viable partner. So we really like that. And we have customers, like Royal Dutch Ahold, they have operations in the US. So we've got many reasons to look to North America as a future growth place.
And can you remind me, what is the seasonality of your business? What are your strongest seasons? Maybe both in terms of total dollar volume, and are there certain quarters that are stronger, maybe in gross margin? Because I know people buy more ginger in the winter time when it's cold out or anything like that.
We see seasonality only because we're growing, but for the most part, our weakest season, it's the wrong choice of words, but our slower season is in the summer in Europe. And the reason for that is that, a bunch of things. Our banana business, a lot of bananas get consumed at school. And so, believe it or not, when schools aren't in place, there's less bananas consumed. And banana is one of our larger categories. And then in the summer, we have all the local, what do you call them? The markets, right? And so there's local produce available. And so the demand for some of the imported produce goes down in that summer season.
Okay.
So we see, so often sort of the last part of Q2 and the first part of Q3, you'll see a little bit of a decline. We shouldn't see that as we're growing because we got so much new stuff in the pipeline. We shouldn't see it, but traditionally that would be our slower time if in a standalone situation. Like if time were to stop and it was the same every quarter, but our reality is that we're adding customers, we're adding products, and so we kind of grow through those.
Gotcha. Okay. And so news flow coming up through the remainder of the year. Obviously, any acquisitions happen, we'll hear about that. Will you announce any big client wins or new product line additions, things like that?
Yeah, we will be announcing that sort of thing. We're always careful on client wins because clients don't, most retailers don't prefer their name in somebody else's press release. And so we have to be coy about how we do that and explain. But yeah, you should expect to see that. We have a number of commercial developments that are in the pipeline that, as well as potential acquisitions, et cetera, that you should be looking to hear from us. We'll report our second quarter on May 30th. So, that'll be less than 2 weeks away. But although we've guided to it now and the numbers are what they are, so there won't be any surprises there.
All right. Excellent. Well, I think we should wrap it up here. Any final comments?
No, I appreciate the time. Just to go back, we're in the healthy foods business, and the good news is that through inflation and everything, people keep eating, and so we're excited by that, and excited by what the future holds for us.
All right. Thanks a lot, Steve. Thanks for the update.
Thanks, Martin. Take care.
Cheers.